Hello everyone, and welcome to our channel where we discuss everything you need to know about mortgages. If you're in the market for a new home or considering refinancing your current mortgage, then you're in the right place. In this video, we'll be discussing the basics of what a mortgage is, the different types of mortgages available, and what factors you should consider when choosing a mortgage. We'll also touch on the importance of interest rates and how they can impact the cost of your loan. So, whether you're a first-time homebuyer or a seasoned homeowner, this video is for you. Be sure to stick around to the end to learn how to make informed decisions and find the right mortgage for your needs. Let's get started. Happy to provide an overview of what a mortgage is. A mortgage is a type of loan that is used to purchase a home or other real estate property. In a mortgage, the borrower agrees to repay the loan amount plus interest over a specified period of time, typically 15 to 30 years. The property being purchased is used as collateral for the loan, meaning that the lender can seize the property if the borrower fails to make the required payments. Mortgages come in many different types, with varying interest rates, payment schedules, and requirements. Some common types of mortgages include fixed-rate mortgages, adjustable-rate mortgages, and government-backed mortgages such as FHA and VA loans. Fixed-rate mortgages are loans with a set interest rate that remains the same throughout the life of the loan. This type of mortgage provides predictability and stability for the borrower, as they can plan their monthly payments without worrying about fluctuating interest rates. Adjustable-rate mortgages (ARMs), on the other hand, have interest rates that change over time based on market conditions. These loans often start with a lower interest rate than fixed-rate mortgages but can become more expensive over time. Government-backed mortgages, such as FHA and VA loans, are guaranteed by the government and have specific requirements for borrowers to qualify. For example, FHA loans are popular with first-time homebuyers and require a lower down payment and credit score than conventional mortgages. Mortgages also have associated fees and costs, such as closing costs, appraisal fees, and mortgage insurance. These costs can add up and significantly increase the overall cost of the mortgage. Overall, mortgages are an important tool for purchasing real estate and owning a home. By understanding the different types of mortgages and associated costs, borrowers can make informed decisions about their home loan options. When applying for a mortgage, lenders typically evaluate a borrower's creditworthiness by reviewing their credit score, debt-to-income ratio, employment history, and other financial factors. This process is called underwriting, and it helps lenders assess the risk of lending money to a particular borrower. Borrowers can also take steps to improve their chances of getting approved for a mortgage, such as saving for a larger down payment or improving their credit score. Additionally, borrowers should compare mortgage offers from multiple lenders to find the best deal for their needs. Once a mortgage is approved, borrowers will begin making monthly payments to their lender. These payments typically include the principal, the amount borrowed, interest, and other costs such as property taxes and insurance. Over time, the borrower's equity in the property will increase as they make these payments and the property value, hopefully, appreciates. If a borrower is unable to make their mortgage payments, they may face foreclosure, which is when the lender takes possession of the property and sells it to recoup their losses. Foreclosure can have serious consequences for the borrower's credit score and financial stability, so it's important to only take on a mortgage that can be comfortably repaid. In conclusion, mortgages are a complex financial product that can help individuals achieve their dream of owning a home. However, they come with significant responsibilities and costs, so it's important to carefully consider all options before taking on a mortgage. By educating themselves on the different types of mortgages and requirements for approval, borrowers can make informed decisions and avoid costly mistakes. Another important aspect of mortgages is refinancing. Refinancing is the process of taking out a new mortgage to replace an existing one, often with the goal of obtaining a lower interest rate, reducing monthly payments, or changing the terms of the loan. Refinancing can be a good option for borrowers who want to lower their monthly mortgage payments, shorten the term of their loan, or tap into their home's equity. However, Refinancing also comes with costs such as closing costs, appraisal fees, and other charges, so borrowers should carefully weigh the pros and cons before deciding to refinance. It's also important to note that mortgages can be sold and transferred to different lenders over time. This is because mortgages are often bundled together with other loans and sold as mortgage-backed securities to investors. As a borrower, this means that the company you originally obtained your mortgage from may not be the one servicing your loan in the long term. In summary, mortgages are a type of loan used to purchase real estate, with varying types and associated costs. By understanding the different types of mortgages and the requirements for approval, borrowers can make informed decisions and avoid costly mistakes. Refinancing and the potential for mortgages to be sold to different lenders are also important factors to consider when obtaining a mortgage. Another important factor to consider when obtaining a mortgage is the interest rate. The interest rate is the amount of money that the borrower will pay the lender for the privilege of borrowing money. The interest rate on a mortgage can be fixed or adjustable, and can have a significant impact on the overall cost of the loan. A fixed-rate mortgage has an interest rate that remains the same for the life of the loan, regardless of changes in the economy or the lender's costs. This can provide stability and predictability for borrowers, but may not be the best option if interest rates are expected to fall in the future. An adjustable-rate mortgage (ARM) has an interest rate that can change over time, based on market conditions and other factors. ARMs can provide lower initial interest rates and lower monthly payments, but can also be riskier for borrowers if interest rates rise in the future. It's also important to consider the length of the mortgage, or the term. Mortgages can have terms ranging from 10 to 30 years, with longer terms resulting in lower monthly payments but higher overall interest costs. In addition to the interest rate and term, borrowers should also consider the fees associated with obtaining a mortgage. These can include closing costs, appraisal fees, and other charges, and can add up to thousands of dollars. Overall, obtaining a mortgage is a complex process that requires careful consideration of many factors. By understanding the different types of mortgages, interest rates, terms, and fees, borrowers can make informed decisions and find the best mortgage for their needs. Finally, it's important for borrowers to have a clear understanding of their financial situation and goals when considering a mortgage. This includes factors such as their credit score, debt-to-income ratio, savings, and long-term plans for homeownership. By taking the time to research and understand the various options available, borrowers can make informed decisions and find the right mortgage for their needs. And if you're interested in learning more about mortgages, be sure to check out our other videos on this topic. We cover everything from the basics of mortgage types and interest rates to more advanced topics like refinancing and mortgage insurance. Whether you're a first-time homebuyer or a seasoned homeowner, our videos provide valuable insights and tips to help you navigate the world of mortgages. So be sure to like and subscribe to our channel for more great content on mortgages.